G'day traders, hi everyone, this is Sam, again to give you another crypto review on Bitcoin, and it's today's Friday the 14th of July. With this video post I'm going to give you a treat, I believe, as it will explain price action of recent in this bear market, and I'll also give you reasons as to why we are finding resistance lately and give you the justification for that reason, and then we'll look at areas or key levels that are important, I believe, and why we need to watch them. I'll explain a number of price ranges where there is resistance support using this method that makes sense. For the technical minded person, you will also see my use of Fibonacci and Elliott wave theory, and this method probably can be incorporated into your strategy. I'll explain why I'm still bullish and what levels I think we need to be cautious with. As for trading strategies, it's not part of this discussion, only levels of interest. I will not talk about how to enter a trade or manage risk. This is all about high level stuff and levels to be cautious of, and potentially whether to take longs or shorts. I think you'll like this as it breaks it down slowly, bit by bit, and let's hope you enjoy it. And please give me feedback if that's the case. I think it's a powerful way of doing things, especially with Bitcoin for now. This methodology hasn't been tested or applied to other charts, but it's probably a good idea to do so. We have chosen Bitcoin chart for a number of reasons, as it does a good job representing Bitcoin activity. And from that, let's begin with this basic chart and continue. At the moment, we think that's the bottom. What I'm going to do is I'm going to look at this chart from two perspectives, one with the log setting on and one with the regular. Those two determine price action. So it's very important that we look at both scenarios, and you will understand why if you watch this video all the way through. So let's begin. Here, the first one is the parallel channel, and it's amazing how it works. So what I did here is just pretty much get this parallel tool, and just do bottom to top. And what we'll know is that is a 50% level. 50% is significant. As you know, it's a key fib level. So I don't need the Fibonacci to do this. So you can see it fits perfectly there as resistance. So that's why we found resistance, and you'll see as I go along how this lines up, this method. The second one is I'll put the second Fibonacci, the second parallel, where it's from top to bottom, and then you can see that also comes into play, and that's my 75% level. Then we do the bottom, similar, and you'll see that it also has a midsection and a low confluence, and that is our 25% level. Now we have this trend line that was significant, which is part of that bump and run strategy or inverted bar, and we had a retest, and we found for a number of reasons why that was a powerful level to enter and support. It also lines up with Fibonacci. Then we put our trend lines in there. This was a strong trend line. We found support, and I'll justify it later on. And then this is potentially a new trend line that we just put there for the time being, but you'll see how this comes about. Next, we'll put our daily level of support. As you can see, that is our daily resistance, how we find daily support. So if we lose this daily, it's going to drop significantly to the next support level. And I don't think that's being the case. Now, why we have resistance at this level, we can show you from a few ways. This is the channel that I've been looking at. From those lines, I've come up with a channel. We get support, and you can see the confluence there in the middle of this channel. Along the line, you can see how it is, and therefore this was the major resistance for the channel. So this works fine, and by doing this, you will see why this is going to be resistance from the non-log level. And our 61% level is there with Fibonacci. So if I was to get the tool to measure that, that is our 61.8 golden ratio. All right, so that level is significant. What else do we have? If we were to do this, we have that 61.8% level, and you can see how exactly it's perfect there. So far that's so good. If I was to apply Fibonacci, you'll see the next level and how that works. So if I was to apply Fibonacci, let's see, where are we? The macros Fibonacci as well. From this perspective, you can see with the log settings, we got a 0.618 there and a 0.05 there, retracement. If I switch this around, you'll see that it works this way. If I add that in, perfectly there. 61.8% just by the measurement. With Fibonacci, it's slightly lower. So we need to keep an eye on that as well. But for now, just keep that in mind. So far so good. This is what we have. Doesn't quite explain that, but I want you to explain these key levels. So 50%, this level here is going to be significant from the log rate perspective. So that is our 32,600 price range. So price is going to come there. It's exactly where our previous resistance was. So it's going to be a significant level. When this price comes down, it found resistance at that level for this reason, as well as this mathematical equation, pretty much what it is. So price will come here and there's liquidity above it, and that's where we've got to be careful. It can come down hard. The other thing is liquidity is there, and the shorts, don't know how much there is there in terms of orders, but there's a possibility that the whales hunt that and bring it back down, or the buying, as the shorts are there, they'll close those shorts by buying, and that could push the price up higher, and we could potentially hit the 61.8% level, and that's going to be a major resistance. And I'll give you reasons for that later on. But that is the two scenarios that I'm looking at with price coming to this level here. We can get a rejection, but I think we'll sweep the top before we come back down, and then we have a formation of some sort, and then we've got to look at it. Anyway, let's leave that for now and move on to the second part of this that I want to discuss. So let's close that, and we'll close that as well. Moving on to the non-log setting. So the non-log setting, we just click on that, put the regular, and put automatic, so we stretch it out a bit. So here's a non-log setting, just a regular price action, and now we're going to look at this chart from that perspective. Similarly, we do our channel. It's slightly different there. This is the raw data that we see. We do the same approach. Midsection, we need to bring that down a bit. Perfect. We have this channel. You can see that playing. So if I was to place this top to bottom as a channel, touch key levels, we have confluence with the middle. Ever so slightly, resistance, support, and we just broke above it. Look how that works out. When we look at it closely, we are being bullish. We've broken above, and we've broken the daily level. Our daily level, if we look at this chart on the daily, we are holding it. And I'm not shorting. So I bought and I'm not shorting at all. That was on the small time frame, that was a swing failure pattern, but I didn't take it. I'm thinking that this is going to go bullish. Now this is the reason why. As soon as I saw that, you can see the confluence with the trend line, the middle of the channel acting as resistance. There's more reasons why there's more resistance, but I want to show you this. So what we can do is now continue on with this approach. What else do we have? That was our daily level. That was our trend line. And you can see this trend line, very clear price action all the way through. So that's why we had the resistance for this downward. So this is playing a good role. So that was a key level that we broke, and now the bump and run strategy is going to continue up. So that's one reason why we justify this approach. And if we continue on with this chart, I'll show you a few more reasons. Now we have the secondary channel that I showed, basically confluence, and that was acting as support. Now with Fibonacci. Now we'll put Fibonacci into this picture. If you look at how I did this, that is our top, bottom Fibonacci, 1-0, and then you can see the 1.414 and the 1.618 act as resistance and push price down. So we hit a golden ratio, that's why we got the sell-off. Now we're going to put also elliott wave counts into this, but first let me just go with the Fibonacci. The second Fibonacci is this. We put our 1, now that's our reference point, 1-0, and now you can see the 1.414 was our resistance level for a while, and our 1.618 was our main resistance as well on the daily. Look at that. Look at the confluence with that, and now we're above it. Now if we can close this on the daily at that level, this is going to continue on and use that as a bounce off if possible. So if it comes down to that level, it makes sense to buy. But this level was our resistance for a while. Now we've got this trend middle of the channel. So if it comes down to that level, 30,800, it's a buy signal. So that's my justification for this level of resistance. It was a golden ratio of 1.618 as well as the channel. Gives good reason in my opinion. Now let's move on to more information. Now I applied the Fibonacci from this way. That's our bottom reference, and our 1 is this reference here. And now you can see it's 1.272, 1.414, and 1.618. Now you can start seeing the next levels above as resistance. This is perfectly aligned with this level here as well. So again, justifies the 32k range as resistance, and as you can see across there, it's perfect with the 1.14. So we might get a good resistance at 34,600. So this might come and get a resistance there and pull back. Now let's look at it from an Elliott wave count perspective. What can be taking place? So when I have this initial, so that is a wave 5 count, and this is our ABC correction. That's one approach into the golden ratio. As you can see, that was our support level. Golden ratio came down, a bit of a shakeout, get the liquidity there, and then back up. So that's nasty, but that's the way it works. Liquidity, and then bang, straight up. Just the same here, liquidity, liquidity, get those two, and then up. So get used to that idea. There was also a harmonic there to give us an idea that was taking place. Now, when we look at this macro chart, remember we were talking about Fibonacci. Let's put the logarithmic. You can see the 0.5 back there against also. Let's just get rid of this for a sec. And we'll put our Elliott wave count like that. And let's go back to putting this in. Hold on, what are we doing? Need the logarithmic. So we've got that. When we look at it from this perspective, that's our ABC. And when we look at it from that perspective, we can see that wave, that is a wave 1, wave 2, possibly wave 3, where we get liquidity in this area. So we're looking for the liquidity. We can probably get it from here. If we get a rejection at the 1.618, we look at wave 4. So we have wave 1, wave 2, wave 3, wherever it is. It could be at that Fibonacci potentially. So that's 38k, and I'm going to tell you why that's significant. And then we get a wave 4, and then wave 5, and we're looking for the 61% level. So we could potentially go, if it's really bullish, we'll probably get to the 75% level. So I'm thinking along those lines with the elite wave count. If we add this in, the bearish scenario, if I was to do this, is this. That is our wave 5. So if we were to look at, let's get rid of these for a sec. If this is a wave 1, 2, this is wave 3, 4, it fits the model, and then wave 5 is there just into the pocket, and then we get a pullback. And this basically is the 50%, and then we come back. So we had our V shape, and we might get a cup of some sort. So even if we get there, we might come back down and then get that. And that could be, if this was to go, this could be our cup and handle. And maybe into this 618 level and then up. And that will fill the ABC as well. Pullback. So that's one scenario. That's short-term potential. The other scenario, as I said, is the bigger one, where it goes for the major Fibonacci levels. Now, what can take place if I clean this up? Here's another way of looking at it. I have posted in the past the formations that are likely this could fit into. There's a few formations that can fit into. We've got the inverted head and shoulders here. Yeah. And then we've got the bigger picture, which is the cup and handle. And that's a handle. And if it breaks that level, then we've got a bigger move. It's a hard one to work out, but we have our levels. So we just keep trading our levels, and then when we see the response, then we could potentially make a decision on that. So what do I have in terms of this price chart? So that's our level there. This is the neckline for this formation, right? And with that formation, that's our depth, height, and the measured height is there. Look at it. It's perfect. It fits perfectly into that level there, the 40,000 range. So if we get an inverted head and shoulder move, we get the retest, and then we get this move, and our wave 5 is probably the target for this particular structure. So 40,000, give or take, makes sense. And if I was to put on the chart with the log, you can see it's the 61.8% level, and wave 3 to 4 and then wave 5 fits that level, and that's the golden ratio, give or take. That range is going to be difficult to pass, and it's got coordinates with this level. The meat of it is right in the middle, neckline. That is going to be a strong resistance perfectly, and it's the 61 golden ratio. So if that's wave 5, wave 3 to 4, wave 5, then we're going to come back down a fair bit, in my opinion. To me, that's a great shorting position. Depending on where you came in with your price, if you bought up along these ways, you'll be fine. I don't think it will come back down to that level, but we will get a retracement, a correction, and we could probably expect, if that was the case, let's do it the other way around. Our golden ratio is here, so it could potentially pull back there or to the 786, but this level makes sense, and then we potentially just scoop like that and then up. Worst case scenario, we come back down deeper, and that is our long-term strategy where we start accumulating again. Now, I'm just going through some scenarios, but what my main goal was is to articulate why this level is significant based on Elliott wave theory, based on this measured move with the inverted head and shoulders. And if it was this bigger structure, and we don't know, if this was a bigger structure like that, where we will just move that for a sec. Let me get rid of it for a sec. No. That formation. If I just hide that for a sec, I'll need to hide this. If we get this cup, give or take a bit, and we get this movement as a 5, and we get a correction, that could be the next move. And then you can also say, okay, is that a rising wedge of some sort? All right, so we had that, and we got to be careful how this comes, because if it hits a level, this rising wedge will make, if we hit that level, it's definitely going to drop, and the 6 calling ratio is there. Having said that, if this is the measured move and it's a bull market, we can also do this if we can measure the next range. So if this was a pull back, we can use that level, and where it pulls back to, just say if it pulls back to here, then we can use that measured move potentially for the next target, which is about 50,000. So 50,000 is it's either going to be 40,000 with this inverted head and shoulders, or the bigger cup and handle and 50,000. So we don't know which one it's going to be, but hopefully that makes sense to you with the two approaches, giving you an idea on Fibonacci and the method of measured moves there. So that is a measured move, which is, I think, is valid. Now if we were to pull this back here, you can see how things line up as well. See how we got the 0.5 was acting as support, we lost it, we came back down again, the 0.382. So if we were to just do that for a sec, where is the 0.382? I'll put it black. You can see how that is also acting as resistance. So if this chart was correct, then our target is there, 48%, 48,000. So if this all fits perfectly, 48,000 is another one as well, and that pretty much lines up with that level here. Liquidity there, and liquidity there. That's all been taken. So this could potentially keep going to wave 5, like I said, and take this out. And if it does come there, I'll be shorting for sure. So we have a number of spots. This level is ultimately the measured move, and we can get that down, and then potentially another one. And this could be a 1, 2, 3, 4, and then a 5, and then correction. So that's it. That's all I got. Hopefully that gives you some idea on how price is acting. There's a few scenarios with log and non-logarithmic, and one more last bit, and I'm going to show you how things work out perfectly. Give me a sec. This last bit that I didn't discuss. Now, if we're going to make an assumption here, if this is our top, and this is 0.5 Fibonacci, and then you've got this level here, as you can see, based on this Fibonacci setup. So if we were to just actually make it all black, that will probably help. If we were to assume that is our 0.5, so the pullback, now look at this. If I was to put the 1 there, look at the 1.618, perfectly there. So if we were counting Elliott wave theory here, if that's our 1, 2, 3, 4, 5, it equates to 1.618 perfectly. And now 1 is there, and you can see how that aligns up perfect. If we look at the bigger picture and we just align 0.382, you can see how that makes difference. And look again, 0.236, perfectly around the 34k range. We talked about that. That's a key level. Fibonacci on the macro, it's a key level. Now look at this golden ratio there. 1. Look at where, just by putting the 0 and the 0.5 there, we have our fib of 1 extension there. Now, I don't know what's down there, but if I was to look at it, back under COVID bottom, it's perfect. So let me see where this is. So if I was to put the previous price on the bottom of COVID, that's it, the Black Swan event, that was a level, and it's perfect. Fits perfectly there. Look at that. So I won't touch it, but that was just reverse engineering, finding the bottom. So if you look at that range, it was 35k or something like that, and that was a COVID wick. Based on Bybit, it doesn't show, but if I was to do it on Bitcoin, Bitstamp or Binance, it will. That's where I got the figure. So these fibs line up perfectly with the bottom and top, and so 0.5 was another reason why it was a strong buying position, and along with this assumption of the 1.618 as well. Everything with Fibonacci lines up perfectly here. So when we look at this, revisit this, we can see that the 1.618 also aligns with that. Our fib count, Elliott wave count, our other Fibonacci level, that also makes sense. Now look at this last bit that I want to talk about. We have a trend line there, resistance, resistance, and I'm thinking wave 3 is there as well. And that is this is going to be a strong resistance either way. So we can see how all this is going to be a strong resistance, and so wave 3 to 4 could be taking place there. And then we go for that 618 level, which is that. Yep, so that's lining up well. And we had this trend line that's already been proven to be the case. Look at that confluence all the way through, resistance, resistance. So this trend line is also telling us, besides the Fibonacci, that that's going to be a strong resistance, 35k range. So if we get a spike, I think that's going to be a bit of resistance as well. Not saying it's wave 3 to 4, I mean sorry, 2 to 3, but it does look like it's a good case for shorting position as well. So I'm going to wrap it up on that. Hopefully this gives you a lot of things to think about, gives you some insight, what fib levels that are important, what levels are important, and potentially trades going forward. I'm going to leave it at that. Please give me a like and share. Talk to you soon.